Hello, everyone, and welcome to our webinar. I am Rachel Dalton. I lead our retail insights team for Kantar in the Americas region, and I am joined by my colleague, Paida Mugudubi, who leads EMEA and APAC for Kantar Retail Insights. And we are delighted to be here and welcome you all to this webinar. And the topic today is Global Retail in Motion, the new mechanics of channel growth. And I'm going to pass it to Paida to review our overall agenda for the webinar.
Thanks, Rachel. So, our session today is in three parts. We want to kick off with a reflection on the key learnings from retail in 2025, and then we'll take a current and forward-looking view on the material changes that are taking place across retail channels, with a particular focus on Europe and the US. And then we will round off with five key things to consider for commerce growth that are applicable beyond today, beyond 2026. So let's get into it. And we just wanted to start off by looking at global trade. And global trade is expected to slow down a fair bit in 2026. And the World Trade Organization now expects world merchandise trade to grow by only 0.5%, which is much lower than the 1.8% they had predicted earlier. A growth of 0.5% is fairly weak in comparison to the previous 2 years, as you can see here when you compare 2026 versus 2025 and 2024. And the slowdown that we are projecting, or the WTO is projecting, reflects the demand that was pulled forward as businesses rushed orders ahead of new tariffs last year. It'll also be driven by a shift in spending from goods to services, as well as cautious investment while financing costs remain high. And of course, supply chains continue to be rewired rather than broadly expanding. So trade isn't collapsing, but that easy volume growth of the past decade is clearly behind us, as you can see represented by these four stack charts. And when we reflect on inflation, inflation is expected to keep easing globally this year, but that doesn't mean prices go back to where they were 5 years. It just means they rise more slowly from today's higher base. And from a consumer point of view, it's a very different reality. Of course, households are likely to feel less squeezed or under the pump by, these significant price hikes that they experienced in previous years. But we know many will still be living with structurally higher rents, higher food costs, and energy bills. And so only gradual relief from interest rate cuts will help. For retailers, it means they can't really expect this big feel-good spending boom. Retailers that will help shoppers stretch their budgets, that will help shoppers trade smartly within categories. Those retailers that will make shoppers feel that they're getting genuine value will win in 2026 and beyond. And when we look at consumer confidence, so this is the stack chart with the pink bars. It is expected to stabilize this year rather than rebound. But what we saw in the Q4 figures reflected on this graph was quite this notable variation in the percentage of consumers that are optimistic by market. So when we look at the US, we're at 40% in Q4, saying they were fairly optimistic compared to, 24, 25% for Germany and the UK, and France much lower than that at 16%. Again, this continues to be a moving target as global trade dynamics continue to shift. But for now, we think consumer confidence will stabilize rather than have this big whopping rebound effect. So when we reflect on 2025, what was apparent for retailers is that those retail growth patterns, the traditional retail growth patterns of previous decades, that they're long gone. And so we're seeing that it's no longer about following scale or history or your traditional planning assumptions. The winners that came out on top really gained success from recognizing that the reality was changing. We talked a lot at Kantar about business not as usual, but it was those retailers that understood that growth was a lot more nuanced versus the previous couple of years. And what we wanted to do here is just to say, before we sort of like into the future, let's take a sort of like a snapshot view of what happened in Europe from a retail perspective. Well, We know that value evolved from a crisis response to a shopping habit. Discounters have a much higher penetration in Europe, but overall, what we saw is, people continue to shop with a value mindset, not as a crisis, a response to crisis, but really becoming entrenched in their daily habits. We also saw that discipline rather than scale defined resilience. So it just didn't guarantee success for big retailers based on scale. It was really about that operational discipline. With regards to private label, over the long term, this has really shifted from being this margin tactical game to being a strategic muscle. I always reflect on Carrefour's 2022 objectives when they were saying, they expect 40% of their food volume sales to be going through private label by 2026. Well, we're here now. And this sort of momentum and betting big on private label isn't just unique to Carrefour. It's sort of like a transformational shift that we've seen across Europe, even though we see a higher penetration of value retailers operating in Europe compared to the US as an example. So again, private label shifted from being this margin tactical play to a strategic muscle, really embedded and being called out in the strategic pronouncements of retailers. Stores reclaim their strategic role in 2026. That high store density that we see in markets like Germany, etc., that really cemented the role of physical retail. Yes, online is driving momentum, but a lot of volume is still going through stores. So we saw a lot of investment in stores in trying to get that higher profitability per square foot. And with regard to retail media proved that it's no longer in this experimental pilot phase, and we saw this shift as it became part of the core of advertisers and retailer strategies. The share of brands working with retailer networks for more than a year, as in 12 months plus, increased from 50% to 63%, and the number working with multiple networks doubled. And this really indicates this deeper strategic integration rather than short experiments that we saw in prior years. And all this data is according to IAB Europe, which is the main industry body that represents digital advertising and marketing across Europe. And moving on to the lessons that we saw in 2025. So if you recall, the big headline story over the last couple of years was this anticipation of the Albertsons Kroger merger. That didn't happen. So what we saw were retailers moving away from growth based on the anticipation of mergers, and everyone's sort of like going back to their core and focusing on that. Affordability was pretty much on the cards. It mattered, but it wasn't just cheap for the sake of cheap. It was about trust and quality. And I always like to draw the example of Costco's Kirkland as a standout example of this trend. I mean, Kirkland was really central to Costco's performance last year, a private label store brand, if you may, that really resonates deeply with US consumers because it blends trust and perceived quality with affordability. Another trend that we saw within the US was, this amplification of smaller baskets, fast emissions. So we saw US shoppers, a sizable chunk, preferring more frequent but tighter trips. They were choosing stores closer to home and buying exactly what they needed in the moment. And of course, this was a way of stretching their money as well as reducing waste. What we saw was that retailers that had reshaped formats prior to this, reshaped formats had very strategic locations and operations to match those faster, smaller basket missions, did particularly well. And of course, all those players that were quick to adapt on pricing and promotions, as well as keeping their inventory moving, did particularly well in 2025. And the last sort of like overall reflection, and this is more of a universal aspect, not just unique to the US or Europe, but it's a global phenomenon. And this is really about the metrics, the store metrics changing. So here we're looking at GMROI, which was a way to check how well your products were earning money compared to the money you've put into stocking them. So we saw profitability per square foot is kind of like this new GMROI metric, the superstar metric in retail. So again, just to rehash, GMRI is a way to check how well your products are earning money compared to the money you've put into stocking them. It's pretty much like asking for every dollar that I spend buying this product, how much gross profit am I actually making? And today, retail is about a greater emphasis on how much each and every square foot or each and every square meter of store space delivers. And retailers are increasingly treating every square foot like an investment. And it's about maximizing sales and margin in each spot, not just tracking product ROI. So space efficiency and high margin mix became so critical and will continue to be so as a metric, as almost as important as in inventory performance. I was kind of like put them on par here. So we've really moved away from this GMRI metric as being the superstar metric and this profitability or return per square foot being a front and center of success. And I'll hand over to Rachel. That's kind of like a quick overview of what our reflections were in 2025. And I'll hand over to you now.
Okay, great, Paida. Thank you so much. So I'm going to start section two, which is a longer section, and really just by setting the stage with some big picture growth numbers and projections for how we see global retail as a total market, but also from a channel lens. And channels operate very differently, as you know, with different rules, different expectations from shoppers. Channel economics are different, shopper missions are different. You can look differently at assortment, at the way innovation happens, price, pack architecture. All of these things really differ channel by channel. From a shopper lens, though, shoppers see less channels and more, they shop more holistically and more in a circular motion as opposed to that traditional path to purchase. So they may distinguish channels less, but from a retailer lens, from a brand lens, channels are really important to treat them uniquely as they are. So I wanted to just first kick off with this global view, and this comes from Kantar forecasts. So at Kantar, we develop a very robust set of data forecasts twice per year, where we roll up from the banner level up to the retailer, up to the market channel level, then to the market level. So these numbers come from our Kantar forecasts. And as you can see, we are projecting 4.9% growth when you look outward to 2030. So going from about 7.3 trillion US dollars to 9.3 trillion US dollars in the next 5 years. And that is an acceleration of growth versus the past 5 years. So there's certainly opportunities across the global commerce space and driven by things such as e-commerce growth, smartphone penetration increases, the rise and continued rise of social commerce and communities and marketplaces. We see, of course, growth in emerging markets, the growing middle class. We see advanced AI technologies that improve personalization and drive also greater operational efficiency. So all of these kind of metrics behind the scenes are really what's propelling the global commerce market forward. Here we look at these same numbers broken up by regions. So you can see that Latin America and Asia Pacific will drive or lead growth, and other regions around the world will moderate. So if you look specifically at Central and South America, you can see our projected growth rates are around 9.2%, as compared with 2.1% over the past 5 years. So that's pretty substantial acceleration. And the same for Asia Pacific. We're projecting acceleration of about 5.9% in sales, as opposed to the last 5 years of only 0.8% growth. So those are your two leading regions. There's a lot of headroom for digital growth, of course, expanding middle classes, et cetera. So as that's our big view of the landscape in terms of the leaders. You can see North America will moderate to about 4.6% growth, coming down a bit. And Western Europe will be fairly stable at about 4.5%. Central and Eastern Europe will be about 4.8%, still really good growth, but slowing down versus the prior 5 years. And then Middle East and Africa also show some acceleration. You can see at 3.8%. So certainly headroom for growth worldwide as we look at total retail sales. Now, when you look at this is the share of global growth by channel in the next 5 years. And what you see is that online will drive 31% share of global growth over the next 5 years, which is not surprising. We see online growing around the world. And really important to mention is not only just the online channel growth, but that omni-channel connection and the importance of having a very strong, integrated, consistent connection between what you do in physical brick and mortar and what you do online, because a lot of that is on the omni-channel side is driving not only online growth, but is driving total store growth as well. So I think that's really the table stakes to consider. Behind online, you see supermarket, hypermarkets, and the value channel are kind of the three channels behind online that will contribute the most share of global growth by 2030. And last in this section, really before we get into this specific markets, and we're going to cover Europe and US in greater detail by channel, but I wanted to share these are the big bets on the top 10 retailers. This is our top 10 retailer leaderboard. And these top 10 will account for 37% of global sales in 2030 and drive 46% of the growth. So these are really your top 10 focus retailers. Your top three have stayed consistent over the past 10 years. That's Walmart, Amazon, and Costco. But you can see others rounding out that leaderboard in 2030 is JD.com, it's the Schwartz Group, it's Aldi and Home Depot, it's Kroger, it's Carrefour, who jumped into the top 10 for the first time, and it's CVS. So those are your retailers where you really will want to lean into partnerships as we move forward. So with that, Paida, I'll pass it back to you to do a deeper dive into Europe.
Thanks, Rachel. So Rachel gave us sort of like a broad-based overview of channel performance, but we wanted to sort of like break down the channels by region and really start to look at what is it that is going to drive growth within each of the channels. So when we're looking at Europe, and this is aggregate Europe, Central and Eastern Europe, as well as Western Europe, the largest channel, retail channels, supermarkets. So the light pink bar is the revenue achieved in 2025, and the dark pink bar is the revenue to be added, the sales to be added between now and 2030. And then obviously the compound annual growth rate sitting on top of that. So yes, biggest channel, supermarket value and online. But we can see here that the momentum in terms of pace is going to come from online channel as well as value in terms of that big growth play. So we're seeing that while online is moderated, it still is pretty much a growth engine across all of Europe. So now I will just focus on some of the biggest channels here and kicking off with supermarkets across Europe. Remember, this is an aggregate of format, right? So if we're looking at Tesco as a supermarket play, we're taking the supermarket format and not their hypermarket format. So here what we're seeing is supermarkets have been under incredible pressure from discounters, and they have really reached a point of where they've had to reinvent themselves, and how they've been pushing back against value players is that meaningful differentiation. It wasn't just enough that they had more stores in place relative to value players when you look at distribution of discounters across Europe. But they really came to that realization is that, how do you set yourself apart from an Aldi and a Lidl? And so what we saw is this constant reinvention of stores. They also worked incredibly hard to drive that AI personalization, and as well as making fresh and private label push because they have the assortment, the range, the variety as well. And this really allowed them to serve a bifurcated shopper. So they were able to appeal, even with their private label SKUs, a more premium consumer while also driving growth and defending baskets against value players that would have encroached on those entry price points. So really that differentiation, but it had to be meaningful against discounters. So that was the strong play. In terms of the growth momentum, we reflected on that 3.9% CAGR to 2030, but there's $103 billion additional revenue between now and 2030 to play for when you're thinking about those growth strategies. And moving on to the next channel, which is value, this is really interesting. So, what we saw is this accelerated expansion of the value channel, particularly in Western Europe over the last 20 years. But what we're seeing is that the channel is sort of like hitting a brick wall, particularly for some retailers, in terms of the model that was built on ultra efficiency now needs a rethink. We're seeing that expansion headroom is limited for some, but we're also seeing that some still have the headroom to respond. Here, we just wanted to highlight a couple of things. So these are just a clipping which says Tesco and Sainsbury's gained breathing space as discount rivals slowed expansion. So as cost pressure mounted, we saw some of those leading discount players halting or putting on the back burner some of the expansion plans, and this is what also allowed retailers like Tesco and Sainsbury's to gain that breathing space. But also, when you look at some discounters are starting to face a lot of pressure. B&M saw its shares plunge. Well, they're citing an accounting error, but there's a lot of pressure as well for those retailers. But on the other hand, there is still beautiful momentum. And if we take Action, for example, really strong aggressive store expansion and market entry, opening hundreds of stores across Europe every year, and it surpassed 3,000 stores in 14 countries. And the formula for Action is really about everyday low prices on a wide and surprising mix of non-food and everyday items. And this is what keeps customers going. If we also take Eurospin, which is a fast grower, this is really about deep discount positioning, but with a strong private label focus. So after establishing its dominance in Italy with a huge storage estate, it then looked to the rest of Central and Eastern Europe, and we saw that expansion, Slovenia, Croatia, and also Serbia to come. So that's really about the value channel. For those established players with scale, it's a time for reinvention and trying to either gain that advantage back over traditional big box players. But for those where there's headroom, we're seeing a store expansion as the growth engine for those players. And moving on to online, really interesting. For many of you operating in the space, the pandemic was really this inflection point to boost those players that were lagging behind with their digital commerce ambitions. But what we saw, in 2020 and immediately after, a lot of operators were actually not making profit from their e-commerce businesses. So now it's online in Europe isn't just about growing sales, it's also about making money on what these retailers are selling. So it was about what we saw is it's about keeping ranges manageable. It's about getting those deliveries right. So we saw a lot of tweaking of delivery slots, and also growth is now coming from these quicker trips, the top-ups and same-day orders where speed and the popular items really matter. So online isn't just another sales channel anymore. And we're seeing it's really a place where media, your data, your pricing, your product availability all converge together, and this is what decide who wins. So it's no longer just about price and availability, it's the convergence of all these factors. And increasingly, we'll see more agentic commerce coming into this space. Obviously, the US is a few steps ahead as far as this is concerned, as we're discussing with Rachel before we jumped onto this. But there's a lot of things to look out for, and it'll be interesting to see how the agentic commerce space plays out, particularly within the grocery space going forward. And the next channel is hypermarket. So remember, there's a lot of volume sitting in big box, particularly in markets like France. But this is the channel, what's high volume, but in terms of momentum, it's really lagging behind other channels. So the pressures come from shoppers bypassing the big box complexity, as we'd like to call it. So discounters have nicked that big value trip, convenience, and online have taken the quick trip. So facing pressure from different angles. And what we observe is that many hypermarkets haven't been refreshed at the pace that the market demands. So it's the long walks, it's the slow checkouts, it's cluttered assortments, and that's far from ideal when shoppers have become more mission-led and impatient. So the bigger European shift, as I mentioned earlier, is because value is now a habit, not a crisis behavior. retailers with these heavy fixed costs and slow decision making and those that are not able to drive relevance are really going to struggle to stay relevant. The other example that we put here is really, yes, it's not a European example, but it reflecting a European retailer strategy. It's Carrefour exiting GCC markets, which allows the retailer to concentrate resources as well as all its strategic effort on where the brand still has scale and competitive strength. So a couple of years ago, Carrefour made big play for LATAM, but we're seeing this exit. And normally, when you get these international retailers retreating from markets that had expanded from, it's really a reflection of the pressure, but ensuring that they're focusing on where it matters. So here we see Carrefour exiting GCC, and there's a concerted effort to focus on its home market of France. And the last channel we just wanted to talk about was convenience. Really exciting space here. And I think Zabka, the Polish convenience player, is the poster child of how to accelerate, expand convenience formats, but also do it while doing a whole lot of other things. So delivering on the go solutions as well as digital solutions. So this convenience ecosystem is really working in Zapka's favor here. So what are the big bets? It's food service, it's fresh categories. These offerings will drive convenience, and growth in convenience stores because of their higher quality. These ready-to-eat products will increase baskets, value, as well as drive repeat visits. And also they compete directly with QSRs, the quick service restaurants and cafes. The other thing as well that we've seen globally is the elevated store experience. So there's experimentation with changing store layouts. We're seeing a lot more cafe style seating, more localized formats. And of course, this encourages shoppers to linger, the longer dwell time. And also, this is happening in tandem with the electric vehicle charge points. So people spending a lot longer to charge their vehicles. And so that dwell time is particularly important. And it's really about enhancing loyalty while also driving brand relevance, particularly amongst the younger consumers. So convenience, very fragmented. If we think United Kingdom is very well-established convenience market, but we're seeing a lot of explosion in Central and Eastern Europe, and it's being driven to a large extent by Zabka as an operator. So rounding off with Europe here, so Rachel talked about the global top 10 retailers to bet on. Here we're now looking at Europe. Yes, it's a fragmented landscape, but despite the fragmentation, the top 10 retailers will account for 40% of sales in 2030, and they will drive 42% of growth in 2030. So considering it's multiple countries and that level of fragmentation, different players, some have a European only presence, some have a more global footprint, but interesting nevertheless. One to watch here is Amazon. As you can see, in 2020, clearly nestled as the number 4 player, but by the time we get to 2030, it's really, neck and neck with Aldi in 2030. So again, a lot of volume shifting to Amazon in the future. But one of the things that I wanted to highlight is that while the shifts in the leaderboards for Europe are interesting, what's important to understand is that European grocers are typically members of at least one major international buying group. And that's significant. And many of these retailers also, they participate in one or more of national or specialist alliances. So understanding how to get fair share or more than your fair share of growth in these leading players is also about understanding the dynamics of the purchasing alliances that are powering the negotiation terms today and in the future. And these buying groups continue to shift. So looking at these leaderboards cold and betting on, okay, so this retailer is going to grow by X% up to 2030. That's not sufficient. It's also about understanding the buying groups that sit behind these retailers that are operating in Europe. And I think that kind of like summarizes an overview of Europe. And over to you, Rachel.
Okay, great, Paida. Thank you. Oh,
Oh
we have a
no, I
couple
still need to
takeaways.
do. Spoke too soon. Okay, so just to summarize, three big takeaways here. So online and value, they're going to continue to pull ahead. They're going to be the growth engine in terms of momentum. But big box players, the volume is sitting there, but they're really going to rely on differentiation and that discipline that I talked about to stay relevant. That operational discipline is absolutely key. No money to waste. It's a fail fast approach, and that, whoever can do it more efficiently and cost effectively wins the game. And yeah, the final key takeaway for Europe is really about, if you could click through, the screen is
There we
stuck.
go.
Yeah. So digital first. So yes, Rachel talked about, online accounting for 31% of growth. Again, in Europe, it's still very relevant. Think of that momentum. So the digital first, mission-focused retailers and those with those efficient value chains will continue to be relevant for consumers, particularly as AI becomes a lot more embedded in shopping habits in the future.
Okay. Thank you so much, Paida. We are going to move on to focus on the US now. And similar to what Paida shared earlier, this is a big picture view of US retail sales by channel. And we track 10 channels at Kantar. And you can see here that retail growth will be driven by the online channel. We are expecting growth of 7.2% and also the highest of volume in terms of sales added as we look outward to 2030. And following online, we have the supermarket channel category specialists, which is an aggregation of many of the different specialty stores around like home improvement, beauty, things like that. We're expecting that to be number three, and then followed by the mass channel is number four. In terms of total sales, in terms of projections outward, the second fastest growing channel in the US market behind online is Club. And that's Costco and Sam's Club, and also BJ's Club in the U.S. market. And then we're also seeing substantial growth from the mass market channel, which is hypermarkets from a global lens, and we're seeing growth at 4.9%. The other channel that I will point out is the value channel, which is smaller in the U.S. market as compared to its dominance in Europe, but we're seeing a lot of momentum with a 4.5% growth rate as we look outward to 2030. So that's a big picture view of the 10 channels that we track at retail and how we expect them to perform in the next 5 years. Similar to Paida, I'm going to go through some of the leading channels in the US market and just give you a big picture view of what we're seeing happen in the channel. And for the online channel, I will point out some of the key initiatives of Amazon, which is really the dominant player in the online channel. And we see Amazon, we say supercharging its technology platform. So as you know, Amazon was incorporated as a technology company first and a retailer second. And you can argue they are a fulfillment company third. They're an entertainment company. They're moving to become a healthcare company. So they really have a very strong and robust ecosystem. But at the core and at the center of that is AWS, its technology platform. And Amazon is really leaning into advancing AI tools and integrating that across its entire ecosystem. One of the specific areas of focus for them, obviously, is fulfillment, and they are pushing to really grow their same-day delivery platform. And this is a big initiative for them to further integrate its grocery banners, but also to drive up convenience for customers who can order fresh groceries along with their general merchandise items and have them delivered same day. So this is a big platform for growth for Amazon. And they're very bullish on their grocery offer as well, with plans to build new Whole Foods Market stores, more Amazon Fresh stores, and also to continue to further integrate across consumables on Amazon.com. So that's a big initiative where Amazon will leverage and lean into its technology expertise and its fulfillment expertise to deliver on this. And then also with all of the advancements around advanced tools like generative AI, agentic AI, Amazon will be leaning in pretty heavily with Gen AI tools for shoppers, also for its marketplace sellers and for its advertisers. So here on the right, you can see some of the shopping tools that Amazon has launched in the last several months, such as Interest AI, Help Me Decide AI, Shopping Guides AI. all of these things that enable or just remove friction even further for their customers and make it easier to find items, to compare items, to discover new items that they may not have thought about before. So a huge technology push for Amazon. You'll see other things that Amazon will be doing across its ecosystem around entertainment and helping support that overall flywheel with some of its entertainment properties and services. And then, of course, health and wellness, particularly in the US market, they are really looking to disrupt, and they're starting to build those muscles to be able to do that as well. So that's a little bit about online channel and Amazon's initiatives as we look outward to 2026. Second is the mass channel. So again, if one of our largest and fastest growing channels in terms of contribution to the overall US market. And when you look at the mass channel, you have two major players in the US market, that's Walmart and Target. And the mass channel initiatives will be really focused and leaning in towards grocery and consumables and essential products. So it's all about delivering convenience and low prices on must-have items. If you look specifically at Walmart, Walmart is really pushing to further integrate its technology and investments in overall automation, in fulfillment and in data to improve its operational efficiencies, and also intends to expand its delivery network and continue to invest in new ways to do this, like in its drone development. And then when you look at Target, Target is looking to focus on relevance and really sharpening its personalization opportunities through its membership programs like Circle and Circle 360, and also its retail media Roundel platform as well. So they'll look to push AI personalization even further and find ways to just drive engagement and drive basket sizes through its membership and through its one-to-one connections with its guests. When you look at the supermarket channel, Paida mentioned this earlier, it's, the Kroger-Albertsons merger has sort of been set sailed. So right now, the supermarket channel overall, Kroger and other leaders in the channel are really looking to how to drive growth internally. They're really looking specifically to at being very disciplined, very focused on how to drive value. Paida mentioned in Europe that operational efficiencies and just store experience are huge bets in Europe. And this is very much the same in the US market as well, and in particular for supermarkets. So Kroger will be leaning into automation to drive up efficiencies, and retail media and private label are also big focus areas for them, and other retailers like Ahold Delhaize, Albertsons, Publix, again, all looking at really focusing on fewer, better stores and just rebuilding growth and their margins and just overall shopper trust and improving experiences. When you look at the club channel, the club is really leaning into their unique growth engines, which is per unit base. Their price points are just very difficult to beat. And they also have membership programs, which are really critical to driving the entire club model. And so they will really be leaning into this, paired with a curated margin and scaling this through digital and through private labels. So when you look at Costco, Paida talked to Kirkland Signature earlier. This is really like a fandom private brand. There's so much passion for this brand among its customers, and just the treasure hunt experience of Costco, which is really what makes Costco unique. They're going to continue to lean into this experience for their customers. And then Sam's Club is really sustaining its momentum and driving a lot of growth by leaning very heavily into digital investments, and also leveraging Walmart's AI capabilities to enhance their overall efficiency. And Sam's Club is really unique in that they are really working and collaborating hand in hand with their members and bringing their members into product innovation and to getting their members to rate products, to enable those products to even be on the shelves. So it's really about a very strong focus on members and leaning into digital and digital growth. And now, when you look at the value channel in the US market, it's really all about operations and store experience, again, really building on what Paida talked about in Europe. And each of the value channel retailers operate a little bit differently. So you have Dollar General, which is really aggressively optimizing its real estate footprint, particularly in rural America. And so, really interestingly, they have over 4,700 retail estate projects happening in 2026, 450 planned new store openings, thousands of remodels. So, really leaning into their stores and the experience of their stores, as well as driving personalization and just general closer connections with their customers. You have Dollar Tree also unlocking higher margin growth by pushing its multi-price model and tightening its operations. And then you have Aldi and Lidl in the US market. So Aldi is really turbocharging its both physical and digital upgrades uh, uh, and building new stores, and has really substantially expanded, is a huge success in the U.S. market. And then you have Aldi with Lidl, which has now a new CEO, and we'll see new things coming from Lidl. And the current Lidl is really about deepening its Mid-Atlantic and Northeast footprint. So it's very regional focused right now. It's using its Super Est market experience to stand out. I think we'll start also seeing some new things happening with Lidl under new leadership in the upcoming months. So to end in the U.S. Focus section, we also wanted to share our top 10 leaderboard. So these are based also on Kantar forecasts. And you can see that the top 10 retailers in the U.S. are estimated to be about 62% of U.S. retail sales by 2030 and drive 73% of the growth. So huge piece of the market is centered on these 10 retailers that you see here. And they really cross all channels, mass, online, club. We have home improvement with Home Depot, Kroger Grocery, CVS and Walgreens are the drug retailers. And then, of course, Target, Lowe's, and Albertsons rounding up the top 10 as leading grocery players. So much growth to be had, and particularly against these top 10. And when you look at three big takeaways for the US, the first is that we saw growth concentrated in the online channels, but you can see across the board there's a lot of headroom for growth across many channels. But one key thing to keep in mind is this omnichannel requirement, and really ensuring that there's consistency and clear integration between digital and your kind of legacy sort of physical store formats to enable the largest opportunity for growth. Number two is it's about experience and being very operationally disciplined and having very sharp execution. And that will determine who wins. And that's not unlike what we see in Europe as well. And number three, it will be about strong digital ecosystems, efficient supply chains, and also these mission-focused propositions, which are the real battlegrounds to growth in the U.S. market as we move into the rest of this calendar year. So we'll finish with our 5 points to remember. Paida, I'll pass it to you to kick us off.
Yeah, thanks. Let's wrap it up. So, we did start off by saying, growth is a little bit unpredictable. So, following those old patterns, scale, history, etc., I think that's kind of like out the window. And
Mhm.
really, it's about sensing and acting very fast. So, those brands that can sense very quickly and act based on what they sense will come out on top. As our key takeaway first. And the second one here is really zoning in on Europe. We saw that online and value win, they're driving momentum. But for big box to survive, it's really about that discipline and differentiation. So, yes, back the winners in value and online. But if you're operating in big box, there's still a lot of volume in there. And this is really about fixing the execution very quickly. So, punching above your weight in a channel that's stalling will still deliver some upsides for brands.
And in the US, as we saw, the online channel is driving the disproportionate growth in terms of being the leader, in terms of driving share growth by 2030. But you could see that all channels are really stepping up to reinvent themselves. So it's really looking channel by channel, retailer by retailer, and looking at how you can optimize your assortment, how you can deliver this best value through pricing and product and innovation, and how you can leverage promotions to drive growth in sort of this new era that we're experiencing in commerce. Operational discipline and store experience, I think those are the big beats that you saw across, really all channels and markets that we explored today. And those are the critical battlegrounds. So it's about how you can flawlessly execute. And that's the real focus and challenge for this year. And then last but not least, how do you lean in to serve mission-led, value-driven, and digital savvy shoppers? Really prioritize mission-driven ranges and be very specific in terms of what you're offering and where you're offering it to maximize your opportunities. So with that, thank you so much for joining us. We hope we provided some value and maybe some new interesting things that you might not have thought about before, and would love for you to reach out to us. Definitely go to retailiq.kantar.com. We have a repository of insights there and ways to contact our team, or feel free to reach out to either Paida or myself directly, and our emails are here, and we'd be happy to continue the conversation. So thank you so much again for joining us.
Thank you.